And for a look at how the markets are reacting to that deal between the US and Iran, we can go to Jameel Ahmad, Chief Analyst at GTC. Good morning, Jameel. What has the investor reaction been so far to the announcement that a peace deal will finally be signed in Switzerland at the end of this week?
Well, they're positive. In one word, we've had a very enthusiastic reaction from investors because investors are finally starting to price in that hopefully we will have less geopolitical risk for the remainder of 2026. And geopolitical risk has been ongoing throughout financial market sentiment this year. So I think investors are looking forward to hopefully this deal being signed at the end of this week. And of course, the key word there is hopefully being signed, because between now and the end of this week, who knows what might take place. But in terms of the market reaction so far, we've got world markets a lot more optimistic because of risk appetite. The oil price has fallen to its lowest levels in around 3 months. US oil is at the lower $80 handles. And we have the gold price, which jumped up significantly on Monday. That might surprise some investors because obviously gold is a safe haven, but that's also because the US dollar has strengthened significantly throughout this geopolitical conflicts, that now we're starting to see some gradual weakness in the US dollar. Investors are putting some money back into gold, and I think they're hoping that towards the end of this year, we might be able to resume the conversation about lower interest rate expectations.
Now, what indications do you think investors will need to see to continue the price in more decline into the price of oil?
Essentially, Oliver, what investors need to see and market watchers is clear indications that the Strait of Hormuz has resumed traffic and efficiency as normal, because of the Strait of Hormuz issues and the potential damage of some oil infrastructure. That's the reason why oil prices have remained persistently high throughout this geopolitical episode. If we start to see traffic moving again, and that essentially the world economy gets back to some sort of normality after 3 months of these ships being stuck at sea in the Strait of Hormuz, that's what investors want to see and would need to see to price in some more additional declines into the price of oil. Having said that, oil prices have dropped significantly from above $100 to now around $80. But we need to see more indications of oil free flowing in order to be, I would say, more optimistic that we can have some more likely declines in the price of oil. I don't think we're going to get back to $65, which is where we were at the beginning of this geopolitical conflict. But there is some potential to go below 80, but we need some clear indications and indicators to match in order to get there.
Thank you very much for that, Jameel Ahmad, Chief Markets Analyst at GTC.